Hello everybody, I'm Giuseppe Basile, also known as the Fib Stalker. Welcome to this review. This is the first video of today. Today is Saturday, and this is the review valid for the week starting tomorrow. It's 1 p.m., 1:15 p.m. EST time here in Toronto. I'm starting this review for the first group of markets here. So let's start from the SP500. This has been an incredible week. As you know, I've not been very active because of the election that I was waiting for Tuesday and Wednesday. Now that everything is cleared up, we have some long bars that have skewed a little bit the picture for the algorithms, but still there are a lot of opportunities as I'm gonna show you in a minute. So when we look at the SP500 here, the daily, we saw this market moving minus 4.5%. I was watching this market at 2 a.m. on Wednesday morning here during the counting, and clearly the market liked what happened here. The clean victor, clear net victory of Trump actually was perceived as something positive from the market by the market, and we saw this market moving higher. And I believe that we can now see very soon we can see a breakout here. The Dow 30 has already broken out, and this market is going to follow. The Nasdaq is a little bit dragging at the moment, but eventually we will see a breakout. Now, in terms of what the market can go, you know very well that active um, we have active areas of participation here. The one 2022, we didn't really make it there, but obviously 2028-50, obviously the algos had to also deal with a lot of emotions here. So I will consider this level actually tested. So we know we have a measured move in place here that does not reach the first target. That's what we're going to see very soon here. And to me, this is also a long-term long signal here. We saw every time the market went into these areas, we uh, they were always an opportunity to buy the market, and this happened recently twice in 2015 and 2016, early 2016, and we're seeing that again. So no need to be worried here. This is a long-term long, and if the market comes back, there's going to be an opportunity to add in a double bottom here. So I don't see at the moment any risk for this strong bull market. In terms of positioning, the market has been using a level that is not really obvious here, and that's what has been trading at the moment. So if the market gets back into the 2150, we're going to see a continuation higher here, a retest and a continuation higher. Okay, next, the dollar index. We saw the same behavior here, long bar, very strong long bar here, which went to test the 50% level, not from the bottom here, but from a different level. And if you remember how we modeled this market in the past, and why actually indicated that the 94 30 and 9450 here was a strong level. It's been respected for a number of times. Then it was in June this year. Has been actually sorry, May has been actually breached. But then we saw again this market picked up by long-term dump money long, and that's the level that the market and the algorithms have been kept using here. So cost participation at this level, 96 basically, and there is also support here from that money. So although I don't trade the dollar index, it's very important to understand whether there is support. So this market has basically support from all the players. Yes, support from smart money on the weekly, the dump money on the monthly, as well as the weekly dump money as well. So I don't see any reason why this market should move lower. In fact, I believe that this market is going to revisit the highs here. So the strategy basically Draghi strategy to try to keep the euro lower and so allowing Germany to keep exporting and basically beating everybody, including US at this moment. It's actually working. As we know, higher dollar index is good for financial elites. It's not good for industrial elites. So we're gonna see with Trump what that is going to mean. Next, silver. We saw obviously the silver going down very strongly here, and silver has just kept following the sequence of measure move here. Let's don't forget that the weekly, despite all the talking and where silver should go, uh, this market is still in a bear market, and there is still bear monthly bear dump participation here. And also we have seen a valid and a very good sequence of measure move here. The participation in 1991 here, and there was the first target being hit, and the market came back supported by this 50% smart money bull here on the weekly, but then he had also to battle against the interest of dump money short, and the next sequence, which is actually being it's in play right now, and that was the next measure move here. We saw the market participating there. I'm not representing that I've been trading this. In fact, I've not been very active last week because of obvious emotional participation. That's I'm a position trader, so that's not what I trade. So now that this market is normalizing a little bit, and as we will probably see the dollar continuing higher, as you can see here, now we have resistance from the weekly dump money here. Next target, make no mistake, is going to be the 1644 level, and then this market could even continue lower. If there is profiting at this market, we're going to trade the next measure move, and remember that below 1683 the bear smart money bears are in control, also on the larger time frame here. So we will probably keep trading this market on the downside. Gold, same story here, with the only difference that the emotional participation and anticipation that the results in the SP5 in the election here would have brought gold much higher. That was the expectation of a lot of people, and as usual, you don't have to work with expectation but other anticipations in the market. Now, even if this level has been broken, that happened on emotional reaction. So now I won't give importance to that, which means that our next target here for gold is going to be 1209, and this market obviously could continue lower alongside the dollar, which is going to continue higher, and silver, which is going to move lower. Next, I want to touch on the US dollar Japanese yen, and the US dollar Canadian dollar and US dollar Swiss franc here. And then I'll also look at three other US dollar related pairs which might be offering opportunity this week. So let's start from the US dollar Japanese yen here and see what's going on. This market has seen the same obvious and extreme behavior that we saw with the dollar last week. So at some point it all seemed that the sky was falling here, and then what happened is that everything reversed. And as you know, this market has been trading the long term under 70, which we called with many months in advance. And this market has tested this level one, twice, three times, four times, and came very shy to retesting it, but that has not happened. And once that level has been tested, and also this area of weekly dump money short has been worked out once twice, and then 3 times here. It was in the working. The market has actually reacted higher. So where we end, where we can actually when and how we can actually take advantage of this market. So first of all, we need to look at where this market is in terms of the previous measure move here. I won't consider this tail here because that again was generated out of emotions. The actual measure move is the one that we mentioned before, 102.80. Of course, as we traded this, we were also stopped out, unfortunately. So the point is that it's important to know what's going on because this gives us an idea what could happen next. Okay, now this market could actually continue higher into that second target. The first target was hit on Thursday here. There was participation here. The market retested this area and then went into the 106.80 here. Obviously, the next level is the 108.80, which is also an important level from the weekly point of view. In fact, it lines up clearly with that bear monthly dump money here, which is going to for sure take kind of oblige and force algorithms to take profits here, and we will see what happens next. Now, in terms of next measure move here, um, something has happened during Friday here, and we need to find the level that is in play, and that level is likely going to be the daily here, as you can see. Now, what do we do with this level? Well, if this level is retested 106.05 because smart money and algorithms want to take a new position or take a position this week, this at the beginning of this week, this becomes 106.05, an area that you want to watch. The market could do this and basically get into the first and second target, helping the price into that 108.80. Eventually, the market will get into that 108.80. It's just a matter of how we play this. Actually managing risk. That's the most important thing, as usual. And when we look at the 4-hour here, we see that there is a lot of 4-hour participation here, potential participation from dump money here. So we will actually look at this price here, putting a stop below 105.85 if we get a retest. Next is the US dollar Canadian dollar, and this market has continued higher, and it's about to, and actually, sorry, has approached that target that we indicated, and that was the 135.35 here. And where this level is coming from is basically a 50% retrace that we have indicated. It's an extension long that we indicated last week, and the market went into this area, respected this 1% level. There was also participation from dump money long here, and this is an extension, so this has the potential to get into that second target. Notice that before we get into the second target, there will be this resistance area here. So the upside at the moment seems very, very limited, at least the upside, which is also kind of that takes into account the risk as well. Now, it could be possible that there is no resistance at this level. If that's the case, we're going to get into 136.63, and then our next move is going to be basically continuing in extension higher here. And that's true, obviously, if the US dollar keep staying strong here. So I don't see the possibility of a strong reaction before we get into that 135.80. So that's something that we're going to watch this week as well. So it's really very little we can do here if this market actually retraces and there is profit taking. I see a profit taking maximum into the 134.70 here, and probably you can put a stop below that area at 134.50, and as you can see here, there would be also the dump money long here on the 4-hour defending that area as well. Okay, so that could be a plan if this market actually is profit taking and gets into that 134.68. Next is the US dollar Swiss franc here, and this market as a resistance, and it has been moving higher here. As you remember, this market had resistance around this 99.50. It actually brought that price lower as well, but let's don't forget that the 50% here has been pierced. All right, so the bear are not willing to the weekly bears here are not willing to short this market. This market moved lower, but it actually encountered also that interest from monthly dump long to keep pushing this price higher. So this market is still moving laterally here, and at the moment it's when we look at the daily, it's actually moving in extension. Again, if we take out that reactionary and emotional spike there, we saw participation before the election at 0.9733, which is this level here, and then the market moving to the first and second target. We saw some profit taking there. The next measure move from highs to new highs here is apparently holding here, and we need to look at the 4-hour as well to see whether that's a fair assessment there. And we saw the high being tested for the lows, and so this market has found both daily and 4-hour daily longs here and 4-hour participation as well. And the daily that money here is coming into supporting this price. So if we saw 0.9841 trading again, then this is going to be an opportunity to continue the long here into 0.9921 and 0.9963. Okay, next, I want to review the US dollar versus the Singapore dollar here, because this may be an interesting opportunity here. This market has support from dump money weekly, sorry, and monthly as well, and it has been moving higher in extensions here, and that's probably what is going to continue here before it gets to previous highs, and then we will reassess the situation. So as you can see, this market has reached first and second target on the weekly time frame. It has traded at 138.29, and this is something that brought price into first and second target. Very technical market. There is support from weekly and dump money here, and if we get a reaction lower, this seems to be very technical market. If we get a reaction lower this week into 140.59, I will certainly be interested in getting long this market around this area here with a stop below the 61.8% level. Let's look at the 4-hour time frame here, and we're going to look at valid area 140.36 and 140.10 here. As you can see, very strong 4-hour dump money long here, which is going to support price, and so this could be a good play here if this market actually retraces into 140.59. Next, I want to touch a little bit on the US dollar Mexican peso here, and this market has been absolutely crazy here, 8% in one day. We saw an incredible week here. Now this market is very extended, and it's very it's not easy to actually trade. Is one of those conditions that I call emotional trading here. And the second target has not been reached. This new highs, and the second target is above here. Uh, it's a very similar setup as the US dollar, Singapore dollar here, and I just want to show you where the second target is, just above here, 2168, and if that's touched, then we will keep trading this market on the long side, but be careful. And the long side will come again at that 2079. So this is not actually this is not I will not track this opportunity here, but the opportunity is definitely there. And similar story here for the US dollar versus the Turkish lira here. We have market almost approached that second target. Not yet. We have support on the weekly from weekly and monthly dump money long here. So if that comes back again, just for your reference, we could look at the highs to new high, but that level has to be tested. Okay, so for now we'll indicate this as the 319.32 here. If we get that after we get into that second time. And finally, the US dollar versus the South African rand here. And when we look at price and what's happening here, um, we can see that this market is actually being supported by monthly dump money long, and it has the possibility to retest the all the way back here, back into 1575. How do we do that? We have a little bit of resistance from the weekly dump money, but just on top of that support from the monthly dump money long. So this market actually is very likely going to continue higher. One level we could watch, although it's something that we have to be very careful here, is the the 14 13, and I would say that the opportunity could come in this range here, which is a little bit too large for my for my tastes here, but that's what could happen. And maybe at the beginning of next week we will know a little bit more about this market, and we can look at how to trade it. One good aspect seems to be here the fact that the 1437 also coincides with that weekly 26 EMA, and typically once we're above that level, that level then acts as support. Now that would line up with these extensions, so I'll give more credit to a smaller retrace here. So our potential plan for this market is going to be participation around 14 13 70 for a continuation higher. All right, so and this is it for this first video. Thanks for watching, and I'll see you in the next one. Bye now.